What is up, you guys? Nick here, and in today's episode, I want to talk about one of the biggest movers I've ever seen on the stock market, ever. This puppy was breaking records left, right, and center and absolutely exploded onto the scene. A ton of people made a ton of money on this stock just last week. There's stories all over the internet about people becoming instant millionaires having invested in this. This company made headlines on virtually every single news source last week. You may have heard of them, but if you haven't already, stick around, grab yourself a coffee, sit back and relax. The company I want to talk about today is Greenwich Lifesciences, trading on the NASDAQ under ticker symbol GLSI. I want to talk about what the company has accomplished that triggered this absolute frenzy of buying, what investors may have failed to realize, and whether or not you should currently sell, hold, or buy the stock. Is there any more room for growth, or is this stock essentially going to fizzle out? But first, Webull has improved and extended their promo. They are now offering 4 free stocks worth up to $3,700. All you have to do is 1, sign up, 2, open an account, 3, deposit in at least $100. You get a couple stocks when you sign up, but you get the real big stocks when you actually deposit that money in. So make sure you do that. Webull's so awesome. I use their platform literally every single day. They have some of the best analytics in the game. I really do love their platform. They're 0% trading commissions. It's really a no-brainer, guys. If you haven't already, hit that subscribe button. I'd really appreciate it. I do a ton of videos like this covering innovative disruptor companies that are poised to dominate the future landscape. I cover EV, tech, and IPOs. You don't want to miss any of these. Smash the like button for the YouTube algorithm, and without further ado, let's get right into it. Alright, so Greenwich Lifesciences. I can't say I'm anything but flabbergasted at the movement this stock made last week. I've honestly just never seen anything like this. Many investors and analysts have literally never seen a stock surge like this before, above a $5 share value at that point. On Tuesday, December 8th, shares were sitting at $5.20, so just above being classified a penny stock, although some might still call it essentially a penny stock. However, fast forward 3 days later, and Greenwich Lifesciences was trading at $129 USD per share. This is incredible. In 3 days, this stock moved up almost 2,400%. This is absolutely incredible. Since then, we have seen a slight decline over the past week. However, we may be beginning to see somewhat of a surge position again. This initial decline here was so much to be expected. There's so much profit taking occurring here, and investors running for the doors. The stock lost 56% valuation in 1 day, so I sure hope you didn't purchase shares at its height. So why did this happen, and is there still more room for growth? Should you buy this ongoing correction? Well, first, let's give a bit of background on the stock. Greenwich Lifesciences is a biotech company. They are a small cap company. They were founded in Texas, the United States, back in 2006. They are a publicly listed clinical stage biopharmaceutical company specifically focused on the development of immunotherapy to prevent breast cancer recurrences in patients who have already undergone surgery. Immunotherapies, if you're unfamiliar, use the body's own defense system to fight the cancer. Their lead product, GP2, is an immunotherapy product derived from a protein that is expressed in breast cancer. Now, cancer treatments is a hot area to be in terms of research. These guys get grants all the time. And above that, breast cancer takes in so much of this grant money. Big pharma companies are so apt to just giving these small little biopharm companies money to work on breast cancer research. This is because breast cancer has such a high prevalence rate and high incidence rate. It accounts for more than 1/4 of all cancers within women. So there are a ton of biopharm and biotech companies continuously working on cancer treatments specifically for breast cancer. And with this comes a whole ton of investor interest. I feel like in the past few months, with this biotech frenzy that's going on, investors are slowly becoming scientists as more people are reading these research papers looking for incidence rates, prevalence rates, and how well these treatments are working. And investors last week were looking very closely at Greenwich Lifesciences. So what catalyzed this frenzy? It must have been something good. And well, yeah, it kind of was. Let's get into it. Well, Greenwich announced very positive clinical trials for its only immunotherapy candidate, GP2, the immunotherapy drug. So like I said, the treatment they're working on is to actually prevent the recurrence of breast cancer in a patient who has already undergone surgery, not to prevent cancer in the first place or to treat an actual tumor. Now, what Greenwich announced is remarkable. It is a step forward in the industry. But did investors actually read into this correctly? I do have a degree in science, and I did actually go through their entire trial, and here's what I think and here's what I've found. Now, patients who did use this drug, GP2, had a 0% recurrence of breast cancer within a 5-year time window. This is remarkable in any aspect. However, in science literature, 0% incidence rates very rarely occur. Now, the stock obviously reacted massively to this news. It's very rare you see a 0 in any sort of clinical trial, and investors with maybe not the science background to be able to read through these trials just threw money at this company. The study reported no cancer recurrences if full immunized, no reported serious adverse events, and a well-tolerated safety profile. They have now had 4 clinical trials, 3 being phase 1, and this last one being a phase 2B. They treated 138 breast cancer patients, and 138 breast cancer patients 5 years later still did not have any incidence of breast cancer. However, looking a bit deeper into the study, one begins to find some holes in its robustness. For example, in the placebo group, so the ones who were in the trial but didn't actually receive the drug, well, only 10.6% of those patients after 5 years actually did have breast cancer. So the incidence rate of breast cancer actually returning in patients after 5 years seems relatively low. Only 10.6% of patients who didn't receive the treatment got breast cancer in this 5-year period. However, much more importantly, and this is really interesting, and this is what I think a lot of investors failed to realize on that opening crazy surge, and maybe began to realize after reading the fine print, looking a bit more into it in the following week. Let's get into this. Now, in the study, there was another immunotherapy drug called trastuzumab, which was used in conjunction with the original drug we were talking about, GP2. Now, when these two drugs were used together, trastuzumab and GP2, this is when you get the 0% incidence rate after 5-year time frame. However, when this main drug in question, GP2, was used by itself, so without this other immunotherapy, trastuzumab, well, after a 5-year time frame, actually 22.4% of patients actually relapsed and had breast cancer, not 0%. So what this means is basically the drug in question, GP2, doesn't actually work that well, if at all, by itself. I honestly do think a lot of investors failed to realize this, saw that big old 0 and, threw their money in and went on a buying frenzy like no one has seen before. So that being said, is this currently a sell, hold, or buy? Is there any future promise in this company? Right now, the stock is volatile, like volatile is going out of style. In the last half hour of last week's trading week, it just surged almost 40% because just like, why not? Biotech has also been an extremely bullish industry the past few weeks and months, and investors have been eagerly trying to latch on to a promising biotech company, which added to this bullishness. Their market cap is sitting at 673 million. They have not generated any revenue, however, have indeed been frugal, spending little cash, just 3.4 million in 2019 in operating expenses. They also have very little cash flow on hand. However, this is the name of the game in these big biotech companies. However, they likely would have to raise some cash somehow, whether that be through a share dilution or some sort of capital raise within the next few quarters if they are to continue funding this project. So the company is performing phase 3 results, which they say they can get similar results from, they're pretty sure. Now, if this company was to release promising phase 3 trials on a bigger scale, this would absolutely explode the share price. It would be. So many investors are looking at this company now. They're really in the limelight. There's all the focus on them. If they do release promising results, there's no question about it, the share price would explode through the roof. However, keep in mind that is a purely speculative play. It's also not unusual for big pharma to see promise in these small micro-cap companies and come in and scoop them up and purchase them. These can amount to $5–10 billion, so keep that in mind. Cancer treatment is where the big money lies within clinical trials, and this is really not out of the ordinary. I personally think there is far too much hype currently priced into the share price. I really do. I would not be surprised to see it continually fall. However, one thing is for sure, and that is there will be a ton of volatility in the share price within the next few weeks. So, you could get lucky and buy on a small dip, get out. It's great for swing traders. However, my personal investment strategy is solely long term. There is just far too much volatility in the share price for me to stomach right now, and I do think over the short to medium term, we will see a gradual decline in price. However, that being said, I do see a lot of promise with this company in the long term. They've released pretty good results. We do need to see what they are able to come up with in their phase 3 trials. If they do release promising results, I don't think it's out of the question by any means that we will see a surging share price. It will go to the moon if they release similar results on a phase 3 trial. So as the lead up to that is launched, I will be releasing continual videos, every quarter or two, just popping them in. So make sure you subscribe. You don't want to miss any of those. I will keep you guys updated on where they're going. I do see lots of promise in this company for the future, but there's just too much volatility for me personally to stomach right now. However, I do love biopharm, I do love biotech, and I do like having small speculative plays in my own portfolio. So if I see the share price, come back down to a reasonable level, maybe around the 25 to 30 mark, I will put in a small position within this company, as I do want to be exposed to their phase 3 trials before those are actually launched, as I do think we will see a vast increase in share price. However, it's likely that we would then see another sharp correction, kind of just like this is played out. Anyways, guys, thanks so much for watching. Thank you for the continued support. I really do appreciate it. Hit the subscribe button. You don't want to miss any of my future updates. Smash the like button for the YouTube algorithm. Don't forget about the Webull promo. 4 free stocks worth up to $3,700. This is a complete no-brainer. All you have to do is sign up, open an account, and deposit in $100 using the link in my description. Anyways, guys, I will see you all next time. Take care. Happy trading. Cheers.